Bismillah. All right, thank you very much. Good morning, everybody. Thank you for attending the Remit One event, Innovation in Payments and Remittances. In this session, we'll be discussing an exciting topic, trust versus innovation, finding the regulatory balance for a stronger money transfer sector. Very relevant topic. We have over 3,000 registrants as of now to the IPR event. I'm sure we should be averaging about at least 120 attendees per session, hopefully. So in this session, we'll be discussing trust versus innovation. I'm Amer Abidi, CMO at Remit One. I'll be hosting the event today. We have an hour and 15 minutes for today's webinar. For the first 40 minutes, I'll moderate a panel discussion with our expert panelists, whom I will introduce shortly. And then there will be 30 minutes at the end of the session for questions from the audience. Please leave your questions via the Q&A button at the bottom of your Zoom screen at any point during the webinar, and we'll try our best to answer as many questions as we can. Before we dive into the panel discussion, just a few words about Remit One quickly. At Remit One, we assist a range of businesses, including startups, established MTOs and banks, by providing them with everything they need to start, run, and expand their global money transfer operation. We provide businesses with leading technology, enabling them to run their entire remittance business. And finally, we support business growth by connecting our clients to our vast global network that we've delicately nurtured over the years. To start today's session, I'm very pleased to introduce our expert panelists. Starting with Mr. Ibrahim Mohammed, payments consultant at Remit One. Ibrahim has over 20 years experience consulting on money transfers, prepaid cards, covering various areas related to operations, technology, compliance, product, and business development. Ibrahim currently works as an independent payments consultant, providing specialized consultancy in the space of payment innovation to startups and incumbents. Also amongst our August panelists today is Kathy Tomasovsky, Executive Director at MSBA, which stands for Money Services Business Association. Kathy is Executive Director of MSBA, the only trade association focused on money transmission, payments, and products. She's an experienced management and operations professional with over 25 years experience in insurance and financial services. We also have amongst us today, Mr. Farouk Al-Jibouri, founder and executive director of Cybercode Technologies. Farouk is the founder and executive director of Cybercode Technologies, which is an innovative digital transformation and cybersecurity provider in the Middle East. He has over 15 years of rich experience in IT and telecoms. So without further ado, let's get into today's panel session. The first question, and this is to set the scene, this question is for all my esteemed panelists here. The financial services sector has always been one of the most heavily regulated industries. We all know this, right? With constantly changing rules and regulations. What are the key compliance regulations and challenges that we commonly see across all jurisdictions? The commonality, so irrespective of where you are in the globe. Let's start with Kathy.
Thank you. And it's an honor to be here with the esteemed panelists and you, Amir. So thank you for inviting us. I would say that, kicking things right off the bat, one of the most important rules that we see cross jurisdiction is rules with regard to know your customer. There may vary in different areas in terms of the level of detail, but all of the regulations ask for the companies to know their customers in essence to prevent money laundering. The second area is risk management. As you enter into the business, understanding your customer profile, understanding the risk, and setting up the appropriate controls in order to effectively do business. I'll stop there and let the others jump in, and then we can add if necessary.
Yeah, so let's move from west to east, starting from Kathy to Ibrahim, and then to Farouk, Ibrahim?
Thanks, Amir, for inviting, and it's a pleasure to meet my esteemed panel speakers as well. So yeah, a very good question, Amir, in terms of yeah, the ongoing situation, the pandemic situation had led to a lot of changes. And obviously this has also pushed the regulatory bodies to think more towards the digital. And there are certain markets where we see, the regulatory, I would say, bodies have been very much supportive in terms of, moving towards digital. In some markets where due to various factors such as lack of infrastructure, or, people not ready to adapt, there has been a couple of challenges. Now, broadly speaking, in terms of common regulations, if we have to classify, we can put it into two baskets, I would say. One is the AML, the anti-money laundering, and the other is the combating of terrorist financing. Now, these two are the key areas, or I would say, all the regulations touch these two broadly areas across MSBs in all the jurisdictions. And when we drill down, as Kathy mentioned, then it comes into customer due diligence, KYC, transaction monitoring, sanction screening, and these are the areas that we see common across all jurisdictions. As Kathy mentioned, it might vary from jurisdiction to jurisdiction. In some jurisdictions, we might have, let's say, extensive set of information being captured as of KYC as compared to other jurisdictions, which might have less information needed to be captured. But all in all, yes, these are the key areas that we see, which are common across all jurisdictions.
Yes, thank you, Ibrahim. Farouk, your perspective from the Middle East?
Yes, hi, I'm happy to be with you today. And thank you, Amir, Kathy, and Ibrahim for the great kick-off of the session. Yeah, well, everybody, especially when it comes to this part of the world, when it comes to the Middle East, we do share the same difficulties happening globally. But before that, there are certain unfortunate issues and circumstances which is also dictating the financial systems and the stability happening all across. And actually that make a big pressure on the regulators to adopt to the latest challenges and be kind of flexible in a sort, but from other areas they have to strictly follow certain guidelines, depending on the situations. Definitely the what I see in the after the pandemic effect, now there are different scores. There is big diversity when it comes to the Middle East region and the level of maturity and adoption of the transformative financial services or fintech technologies. And definitely it's led by some countries whereby they are to a certain extent fast forward in the adoption, whereas some others are actually still living in the 100 years backward when it comes to the financial systems. It's still it's a cash markets whereby regulators have very minimal impact when it comes to controlling the environment. And this is what all actually driving different regulators in the region to adopt more of a regional approach, whereby those countries should come together in the efforts to make it a better environment, more digitized and more fluent, given the challenges happening all across. But Middle East is a very hot spot when it comes to AML and anti-terrorism. Actually we are leading the world in that effort on the ground, plus on the financial system. And this is where actually the real challenge, whereby regulators are busy more or less to control different parts of the world and different parts of the region. And meanwhile, they have to balance equivalently with the trends that happening in the fintech.
Because Middle East is such a big market in terms of, as a sending entity, I believe, if my memory serves me right, after the United States, Saudi Arabia is one of the biggest remitting countries. And then, of course, if you take the Middle East as a whole, it's such an important region, especially in the context of remittances. Is it fair to say that regulators are all for innovation in the Middle East? Are they helping drive innovation?
Well, you cannot answer it with the single, answer, to be quite honest, because I told you earlier, the diversity in the Middle East is enormous. Some of the countries actually are fast forward in adoption of the very latest, the most modern technological innovations happening in the financial services. Whereas others actually they are helpless. They cannot, be with the rhythm of the trends, even in the adopting the basics of the financial inclusions and financial transformation, digital transformation. And this is where you find there is massive diversity in the levels of adoption. There is big actually issues happening even within, country to country, or even within the same country in certain areas of the region. They are very hot. Actually, there is a global pressure from the World Bank and from all the regulatories and the United Nations that those countries and the regulatories in those countries should come up to the level at least equivalent to the region and up to the standards of the global industry. And definitely, some of the regulators are not doing the job. I believe there are some connections between regulatories and politics, and this, become overcomplicating. It's actually overcomplicating the situation because the regulator is not freely can determine the financial decisions. It could be driven by some kind of politics, and this will actually complicate and slow the adoption of the latest digital innovations, because it might be conflicting some political influences here or there.
I know that when it comes to fintech, supporting fintech startups, especially in the UAE and Saudi Arabia, there is a lot of government support to these businesses, which basically means that the government is behind, is all for supporting these fintechs. If you're going to support fintechs, that means you have to support technology, basically. And if you support technology, then you support automation, you support all these various facets. Then, if anything, is it fair to say that, especially regulators from the UAE and Saudi Arabia are helping, leading the way in terms of pushing innovation, being all for technology and investing lots of money in their fintech startups?
Yeah, well, you mentioned particularly UAE and Saudi. Actually, those two countries are I was referring to as top leaders in the region, and I believe also globally, in adoption of the latest innovations happening in the fintech industry. Just yesterday, for example, it was announced in the KSA that the first digital bank has been licensed by the regulator. A couple of weeks back, also UAE has announced, for example, fully digital, a complete digital bank. The same is in the remittances, digitization and adoption of technology, and giving the openness in implementing the standards, plus the vast amount of technological companies based in both UAE and KSA actually are a prototype of success. And this is where we hope the rest of the region can actually follow what's happening in here. Because in UAE you can entertain the latest, up to the latest and the best innovations happening. You cannot feel when it was launched. You immediately find it in the market, in the space, and this actually reflects big agility, support for digitization and technological advancement. And actually, the leaders of those countries consider them as a tool of success. Whereby the rest of the region maybe look at it in a different way.
I believe they take a lot of inspiration from European regulators, UK regulators. Well, I can't use UK and Europe together now, but UK regulators, I think, do have some influence or rather, let me rephrase that. UK regulators have more of an influence in the UAE than US regulators. Is that a fair comment, Kathy?
Yes, I would say that, you know, the US regulators do not influence the Middle East there. I believe because we're a little bit more conservative when it comes to technology and fintech. I think one of the things actually for the association when we started was to help these new startups navigate the different rules and regulations of the states. So while you know, the Middle East may have different regions that are working at different levels, here in the United States, we have 49 different entities within a federal regulation that are managing, and it's very hard to navigate. Now, there's many things that are going on to help ease that, but it's still a complex structure. And, you know, depending on which state that you are housed in and depends on whether they are more friendly to things. For example, the state of Wyoming, which is very much to the north, very cold up there, they are being very friendly to blockchain and virtual currency, you know, for miners and things of that nature, where you're not going to see that in every state.
Right. How far are we, Kathy, from you know, this ubiquitous federal money service license like you have in Europe, for example? So if I get a license, a money transfer license in Germany, I can passport that to any of the 20 plus European nations. Can we do so? I know we don't have such a license in the US. You have to get individually, right, these licenses. I mean, how far are we from getting to that federal license stage?
So I'll answer that in two parts. The first part is that over the last 2 years, they have made some movement towards harmonizing to a single license. So there are 29 states that have bound it together. So if you're a startup company and you come into the states, you can have what's called your level 1 documents, right? Your financial statements, your business plan, your basics reviewed by a particular assigned state, and the 29 other states will say, okay, we'll accept these, which is a huge step. You know, it's more than half of the states. You still have to go into each of these other 29 states and do your state specific items. Also, over the last 2 years, we here at the association, along with some other industry and regulators, have been working on what's called harmonizing the money transmission law. We expect to have a draft of that to push out to the states sometime this summer. So perhaps beginning in 2023, 2024, we may see a more uniform law. The final area is that on the federal level, the OCC, which regulates our banking entities, has proposed under the previous administration some forms of what people might say can be a federal license. However, that license is very, very expensive and difficult to get and may still take you 2 to 3 years. So getting a fintech charter or a banking license is not an easy solution that sometimes people feel may come about. But there's definite movement, I guess, at the end of the day. But as anything with the regulation, it's very slow.
But if one were to go and, you know, start applying for licenses in all 50 states, surely it would take them much longer than 3 years. So in a way, this, right? Is that?
Well, I have seen from some companies that come in, there's a couple things. You can do this if you have the capital, right? And you're well capitalized. You can get your licenses within 18 months. You need a good partner in a law firm who has what I'll say helpful contacts, you know, how to who to call at the state to help expedite that through. There's so 18 months is reasonable, but yeah, it can take as long as 3 years.
Right. 18 months is it's an impressive, I mean, it's impressively short, right? In the grand scheme of things, I suppose. Are you saying this in 18 months, if you have sufficient capital, you can actually get a license? You can be fully licensed and bank accounted across 50 states in 18 months, provided you have sufficient capital. Is that?
So when you throw in the word banked,
Mhm.
becomes a little tricky, because the licensing and the banking would be separate,
Right.
but you could get your licenses in 18 months. Yes, I
Wow.
have seen it done. It's, you know, it's not inexpensive is what I'll say, you know.
I see. Interesting. Ibrahim, do you have any comments?
No, it's interesting to see how the US market, operates across states. Now with UK, of course, we were following, the standard PSD2. And from there, we have, of course, the open banking. Now, we still are enjoying the benefit of PSD2. So when we have the licenses for UK institutions, though we don't have the passporting rights in EU, we can still do, or I would say redo the application since they follow the same regulations, under PSD2. So that makes it still, I would say, relatively easier for companies in UK who would like to expand into EU markets.
How are we fair? I mean, how are we doing in terms of open banking in the US? And then the same question to in the context of the Middle East as well. Kathy and then Farouk.
So in the US, I would say we're not there yet. You know, there's these indirect discussions coming through, which would be closer to the data security issues. You know, you'll see individualized states putting requirements out there, California, for example, New York, about the data ownership of the consumer and what a company has to do to be able to give the consumer their data. But we're not in those open banking discussions like the UK has at this point.
Okay. Farouk, how is the situation over there in the Middle East?
Yeah, well, again, the answer is, it can go different directions. Many of the countries in the Middle East have reached the stability and maturity in the financial system, whereby you see, institutes, banking for the past like 20 years. Okay, it's not a surprise. Whereas other markets actually, till now, they are having an openness to open a new bank. In some of the countries, opening a bank actually is extremely easy, and in the some other parts of this region, it's blocked. You cannot initiate a new bank anymore, because there is a regulation whereby the number of banks versus the market has already been defined. If there is any kind of a new license or sub-license, it would be given to the established banks. Whereas other countries actually are having a different approach, whereby, as we start to see, some of them are licensing digital bank separately. Money transfers are being separate. In some other countries has been shut down. So there is, again, continuous reshaping in the scheme when it comes to that. So yeah, I mean, some of the countries actually, as far as I'm aware, you cannot open a bank because they reach to a level whereby they don't allow, there is no seats for newcomers. And others, no, they open, they are open for that. The process depends. There are capital, there is like a kind of, as Cassie stated, some legal advisory, public relationship, definitely political relationship in here and there, plus certain standards you have to follow, and then you can get your bank licensed.
Kathy, do you feel that the money transfer industry is, it always plays second fiddle to the payments industry. How does the government of the United States view this industry? Do they want to support this industry? You know, in the UK, you know, the MTOs, the money transfer operators, feel that the government just doesn't have time for them. That's how our, you know, the players feel, the supply chain members here. Is it the same over there?
So I
sentiment?
think I think the introduction of a digital and fintech to that delivery mechanism has made the government more supportive. You know, the whole idea of global payments, whether it's consumer to consumer, business to business, and the fact that remittances fall in that umbrella has, you know, gives us that support. In general, though, I think it's more the banking industry is less inclined to be supportive, and we still see it's very challenging for a company to get a bank account here. You know, that's still probably one of the most challenging areas, and we have had the federal banking regulators make statements, you know, to support the industry by doing a risk-based decision process. There are some things that passed this past January with regard to the strengthening of AML programs and some items there that may help the de-risking, but that remains our pain point here in the industry. So it's an indirect, I'll say, support. You know, we'd like to see the government be stronger about to the banks to talk about how important it is to us. I will say that during the pandemic, you know, these businesses really were a lifeline for many constituents here. And I think that that helped to strengthen the profile of the companies as well.
Right. That's interesting. Yeah, thank you, Kathy. Ibrahim, from your perspective, post-Brexit, has the government stance changed towards the MSB sector? I mean, how are they viewing us differently now?
Not exactly. In fact, they are, as you know, FCA has been quite, you know, open to support innovation in the space, and that's why, you know, they were having the sandbox and they were opening up to a lot of fintechs and new players coming in the market, and that's where we see, you know, the boom of a lot of new fintechs that have come up and established themselves in UK, be it challenger banks, be it, you know, money transfer digital players. So yeah, I mean, and if I talk about UK in specifically, then definitely the government has been quite supportive. Their main, of course, concerns were around, you know, the transparency and to ensure that, you know, people get the services that they are being told to or told about, you know. So that's the main, I would say, areas that they focus on.
So these things that you mentioned, interesting, you know, lead me to the next question seamlessly. You mentioned transparency. These, you know, these concerns that they cite, the regulators cite, these can be addressed by technology. What areas and technologies are there in the industry that ensure we meet compliance? I know it means, I mean, it's the question applies to all the panelists.
Yeah. So basically, Amir, they look into different areas, you know, when it comes to transparency. They look into the complaint handling process, they look into the incident reporting, they look into the overall, you know, system checks and controls you have in place. Of course, AML is one component, you know. So yes, definitely when they do the assessments of companies, they cover all those areas, which leads to, of course, giving them the assurance of how transparent, you know, that entity is towards its customers.
Right. Farouk?
Yeah, well, definitely. I mean, technology is actually definitely help to reduce the bureaucracy in the process. Now there have been, like, in the past 6 to 9 months, there have been a wide deployment of technological systems all across the region, pushed by the regulators in different countries in order to digitize or computerize or systemize the audit process, because rather than going back and forth to manual, which eventually I've been living here, working here in this part of the world. Remittances could be a big nightmare. Companies, going through many compliance checks, and even individuals as well. And there is a scrutinizing in the transfers, and this is definitely by the heat of the geopolitics and the stability of the Middle East, driven by that and pushed by that. Adopting those technological systems are definitely gonna help, because using certain technologies and the AI, blockchain will help on, and actually they already start to be implemented in certain parts of the region, whereby you can see compliance happening on the fly, rather than being checked manually, or via certain bureaucratic process. Now it's more automated, and we see regulators actually are deploying those quite proactively, because they believe and they see this is a big impact on the economic situation in every single country in the region.
So can you just elaborate on this technological solutions? So what do you mean by that? For the benefit of my audience here, you have solutions for IDV, KYC, you have automated API calls that a system can make to these block lists, etc. Is this what you're referring to, or are there other technological solutions that we need to be aware of?
Yeah, so basically, it's a set of all of this. But one of the problems in the Middle East, when you gauge the amount of data you have, around your customers, and this is where we kick-started the panel. Actually, there is big lack. Certain countries probably they have full database, but others are not. And when you don't have that, actually you have to rebuild it. Then you can go and deploy those compliance tools. Very recently, and actually it's happening right now in certain countries, for instance, Go AML is being deployed pushed by certain regulators, and they gave a mandate in order to facilitate the anti-money laundering process, rather than deploying on certain standards or manuals or catalogs. So deploying that system in a couple of those countries in the region actually will help to facilitate the compliance versus going in the very long backlog and on a routine process.
Right, Farouk. Just another question. Actually, this is a question that I guess I get asked a lot, by my clients and prospects that I deal with, in the UAE and Saudi Arabia as well. I think, and you can correct me if I'm wrong. You have to do a physical KYC check at least once. So you have to go in person to give your details, and you have to do that once before you switch over to a digital platform like a mobile app or online portal. So is that requirement still there? And when will we see this requirement go?
Yeah, well, probably I can repeat what Kathy's statement. Opening an account is one of the most difficult tasks in the region, generally speaking. It requires physical attendance, and certain countries actually even don't accept power of attorney. They have to bring the owners of those companies in person. They have to get wet signatures. They have to maybe take some live whatever biometrics and everything. But for instance, in the UAE, EKYC has been rolled out, and it's been executed. At least I know after the pandemic, every bank has rolled out the EKYC, and actually it's moving very well, and the performance is very, very, very positive. I don't specifically know about if KSA or other countries has deployed that, but I do know that eKYC is becoming very hot topic after COVID in the region.
So we'll be seeing a lot more, a lot of innovation in this space. Yeah.
Yeah.
To watch the space for eKYC. Okay, that's great. Thank you. I'll move to the next question. And this question is a very interesting one. Do current regulations impede or enable innovation in the industry? So the current regulation, now we have three different, obviously representatives here, right? We have Middle East, we have US, and Europe/UK. Let's get your individual takes on this. Do you feel that the current regulations impede or enable innovation in the industry? Your views on this statement.
Yeah, well, I can start. I mean, regulations, specifically in the Middle East, is not only driven by, financial regulations. We have to understand that there is also Sharia and Islamic regulations. It's within the core of the financial systems here in the Middle East and in any Islamic nation. And definitely that actually you go from like an economical advisor to sometimes to a Sharia consultant or advisor. And specifically, I mean, we see kind of, which is natural, I believe. There is a continuous panels, discussions, opinions for every new digital innovation solution, I would say. So and that is, I believe, is natural, but definitely how there is also kind of differences on when this country will regulate it and they will approve this is kind of Sharia compliant or Islamic compliant or not. And then that is another layer, I would say, that could in certain cases delay or accelerate adoption of certain modern solutions, because they are not, I mean, Islam in general and those regulators in specific, they are not against technology, but it's against or it's actually want to control in a Sharia compliant way the flow and the business and the markups and everything. It all should be very transparent as per the Sharia. So certain times you find that if there is kind of a conflict, or not necessarily a conflict, it should be studied by expertise in the Sharia before determining if that is something should fly or not, or maybe there need to be done some adjustment or modifications or alternation in the solution or in the that particular thing. So yeah, the regulators, generally speaking, need to be agile. I believe, generally speaking, if we don't talk about particular cases, if we take generally the region, there is lack of trendy leadership. You still find, I mean, in certain countries, the same head of compliance or governor or wherever, it depends on the body, he's been there for the past 30 or 20 years. So this one person who is leading that organization definitely, I mean, need to be instituted. It's not you need to be a personal or relying on a person. So this diversity or this new blood is needed in certain areas of the region in order to boost the digital transformation in those countries and those regions and help them to adopt newer schemes. I want to say something, I mean, about this area and this region in particular. And we can see probably, let's say, from maybe movies like in the US, the financial system is very stable and forward. Like if you go to the 70s or to the 60s, you find facilities. You don't find them today in certain part of our world, unfortunately. And that is led by institute and vision as well. But here, in this part of the world, it become actually a necessity. And this is where the market actually is pushing the regulators to adopt that, not the other way around. Because when it comes that difficulty of, let's say, if you have a security instability, if you don't have economical instability, if you don't have business instability, so definitely you have to innovate. You don't have
Yeah.
to stand still and,
Yeah.
you know, look at everything as if, you know, it's collapsing around you. As a regulator, he's been pushed by the markets, okay, that you guys have to open it up for like blockchain. You have to open it up for digital transformation. We cannot live anymore. We cannot sustain. We cannot grow if you are, you know, still considering a backward regulations and very old, you know, statements that, you know, you cannot come up to the regional, or at least, I mean, to the global, or at least the regional levels.
Okay, when you say markets, are you referring to banks? Are you referring to neobanks? Are you referring to individuals or people or migrant remitters, or who are you? If you could be a
Well,
bit more specific.
yeah, it's mainly driven by the consumers
Right,
and the traders. Okay,
right,
from the perspective I'm seeing and I'm experiencing, you know, consumers actually are pushing the regulators and the bankers to be more innovative. Otherwise, they will find solutions elsewhere. You know what I mean? If you don't provide me with you know, up-to-date services, I can, now I'm sitting in the UAE, I can open up a digital account in UK, and I can start you know, doing whatever I want to do from there, irrespective of my location. This what actually digital transformation enabled businesses and consumers. So then there is a pressure from the consumers, from the traders, that if I don't get those facilities, I will find it elsewhere. And I believe this is consistently putting a continuous pressure on certain regulators. Other regulators, like the samples, generally, when we talk about GCC generally are very, very mature. And actually, it's one of the most openness and forward-thinking regulators. There is a body for the GCC, and this is where I believe they share the common vision. Whereas if you go outside, if you go, for example, to Levant, to Iraq, to Yemen, to, let's say, Egypt, to North Africa region, you find it, you know, different. You find some countries actually are very, very backward in terms of technology adoption, and they are completely against any uh, regulations or systems or technological innovation in that space. And this could be driven by their government will, or it could be driven by their regulators, irrespective of the reason. But this is currently the situation.
right. Kathy, in terms of technology, obviously, US, we all know, you know, it's the most powerful nation on earth. The amount of money they spend on technology, I mean, it's you know, it's just beyond imagination, right? But when it comes to our payments industry, our banking industry, I mean, you know, in terms, you can't compare the US to Europe. Europe seems to be far more advanced and ready. Why is this the case? Any thoughts?
Well, I think it does go back a little bit to how we were established with the states, you know, the individual entities and the federal level. And each state has its own perspective on what's the best way to service the consumer. I will do a little plug for them. I had the opportunity to speak with the head of the financial services industry in the state of Washington, which is very open to the new technologies. And in defense of the regulators, what's happening is that many of these new companies and technologies that are coming at them, they have to begin to understand what they are to determine how do they regulate. Do they fall under my umbrella? Is it money transmission, or is it a security? Should it be regulated by the Security and Exchange? You know, we see, for example, if you look at Bitcoin, the volatility of the product. You know, some states are regulating virtual currency and have specific laws on their books. Others are covering it under general money transmission, and still others haven't really taken a pass at it. You know, we do have interesting products that are being developed all the time, and the regulators need to understand what is that product, how does it work, where's the money going, who holds it, and how to protect the consumers. And when you think about all the different companies coming at these different entities and their sort of small group of people that have to work with the established controls, it's hard for them. At the big tech level, I'll say, you know, both sides of the administration are skeptical of, you know, the companies like Facebook and Google, and what they will bring to the US. I think that we will see some additional regulation over those larger entities, and what that's going to mean sort of spilling down into the payments arenas, right? But all of those companies are ones that are looking and using their rails, if you will, to communicate, to do such types of payments. And you know, there's a lot of discussion with that occurring here in the US. And I think the final point I'll make is I think that although there's plenty of business, I think the banks at the end of the day would are seeing their traditional structures being affected. And I think they're helping to influence the roadblocks for these newer fintech companies and also the MTOs to, you know, minimize their customers.
Yeah, I mean, I remember, what's his name, Jamie Dimon, the CEO of JP Morgan Chase. He's very anti-Bitcoin, but yeah, so you can see these large investment banks very anti-crypto. But I heard, and you can correct me if I'm wrong, that some of these investment banks have already started, you know, preparing proposals for their own cryptocurrencies.
They have. There's some things there. The last point I'll make about that in terms of what happens to the average consumer is that, you know, and I'm sure there's cases of ransomware over in, you know, all parts of the country, and you see that that's being requested to be paid in Bitcoin or some type of virtual currency. So that negative news, you know, and the proposed anonymity of all of that adds into the regulators' concerns about money laundering and terrorist financing. You know, it doesn't do us any good, but that's the kind of general information that regulators have coming at them, only negative. And it sort of feeds into, maybe we shouldn't, you know, use these tools. Maybe we shouldn't allow for this to happen because it's too risky. So, you know, taking back some of those headline type activities and building a better understanding is important.
A question for you, Kathy, and Ibrahim, and Farouk, feel free to you know, add your thoughts on this as well. Facebook applied for a money transfer license in Spain a few years ago. They got their license. You can use WhatsApp now, which is owned by Facebook, of course, to send money. You have company, obviously Apple, Google, in some shape or form, they have a, you know, a money transfer license, their own version, whatever, you know, the regulator might want to call that. Apple Pay, Google Pay, and so on and so forth. They're operating under some sort of regulation, right? Should our industry be worried? Should the, you know, the smaller MTOs, you know, who obviously they look after our community, they have an agent network, you know, there's so much at stake here. Should they be really worried that Facebook and Google can go and get a money transfer license and start competing with them, you know, with the click of a button? You see that happening? What are your thoughts?
I guess I'll start here in the U.S. Because we have other companies that are, I'll say, coming into those local communities. I do think that to some degree we will see some of those smaller MTOs go away or merge with others. The cost of the compliance, the licensing will just become prohibitive for them in order to maintain that. We've seen in some market research here that the selection by a consumer for a particular brand, MTO or whatever, many times is done out of a relationship and a loyalty and not just price-based. I think we'll see that with age, that the younger consumer who's sort of grown up with technology will be that consumer that is more inclined to go to an Apple or a Google Pay transmitter type activity than perhaps his parents were, because they felt a certain loyalty. They were multitasking their services. Even here within the US, in traditional banking, we're seeing that generation not have traditional bank accounts. So I think the whole industry, financial services industry, if you will, is experiencing a disruptive occurrence. And it's going to affect not just MTOs, but also the general banking industry as well.
Thank you, Kathy. Ibrahim, your thoughts?
Yeah, I mean, the big techs definitely are jumping into a space. So what I see from UK perspective, from EU perspective, it's definitely they will have a competition with already the established players. And when I say established players, so there are two kinds of money transfer operators, the traditional ones, like of Western Union and all, and the digital players, like the TransferWise. Now, it depends on the approach the big techs take. They might either go and probably acquire one of the large players if they can, and then enter into this, partnership or collaboration. Or it could be that, they establish on their own, since they have the huge, I would say, customer base, and they can rail on that. So, but one of the challenges definitely big techs would also face if they go on their own is they will have to then ensure that they have all the connectivities, with all the players in the ecosystem. So that might be quite challenging for them if they just want to enter into this space independently rather than going and partnering with somebody which is already established.
Yeah, good point.
Yeah.
Farouk, thank you, Ibrahim. Farouk, you want to add anything?
Yeah, definitely. I mean, when it comes to to the payments industry, what's happening with the gigantic tech firms actually is very noticeable. Not only in the US. If you look at, for example, on the far east, when it comes to China, WeChat predominantly control the exchange of money over an instant message application. And I think, I don't know, this is my personal opinion, I do think that the Facebook took that approach due to the massive success happened in the WeChat a very long time ago. They were one of the very first to launch it in a country which is China, and and then there is massive success, and the transformation happened. Now, this part of the world, yeah, definitely there are actually unlimited amount of initiatives coming from there. We don't have tech firms, unfortunately, here, but we do have telecom operators who know the technology, and those telecom operators, they are actually very fast forward in terms of bringing those like digital wallet, e-wallet, instant money transfer, digital forms of transfer, using their backbone, using their customer reach, and definitely in different part of the regions, they can get around the regulations. This actually brings us to the other side of the thing, which is like the banks themselves and the financial ecosystem. The financial ecosystem should be ready for that transformation, because if you are talking to a pure, classical kind of banker, and you told him everything currently can be done digitally, So he will not understand you. He will not even talk to you, right? And this is where, I mean, if this digital innovative company comes to a banker and he did not listen to, he will go to a different investors, and he will go to the, you know, tech enthusiast investors, telecom operators, some joint effort. So for example, يعني in UAE, the ex-CEO of Emaar, which is a hospitality, he's currently he's a founder of a first digital bank in UAE. He's not somebody who is driven from the banker society.
Right,
And
right.
so this is what I'm saying, that it's been driven by investors, by tech enthusiasts, you know, يعني JVs and entities, and they are, you know, finding their space in the region, and definitely they are finding a market, specifically the younger generation. The younger generation don't believe they need any more. They don't need a bank, or they can do everything digitally. At least this is the, you know, what they are looking for, not necessarily deployed. But I believe they start to sense it. We don't see, يعني, Facebook and like maybe WhatsApp through, يعني, Facebook through WhatsApp, yes, but Facebook itself, because there is diversity in the region of adoption of Facebook itself. But when it comes to WhatsApp, yes, it's one of the very large potential. If they roll out digital services, definitely it will impact, and everybody, I believe, will start to defend till they reach to you know, a middle position to make that flow.
But isn't that somewhat concerning though, Farouk, based on what you said? Hospitality executives entering financial services space, founding digital banks, as you said. So, I mean, from a compliance perspective, that is quite worrying, right?
Yeah, well, I believe this is where bankers win. They know the regulations, they know the compliance, they know what it will take. But unfortunately, some of them, they don't see the future. I think not only the future, they don't see the current. They don't realize, they don't want to accept that today digitization could drive, you know, 100% of your business. They cannot. You know, some of the banks, for example, here in the UAE, without naming them, they've been constantly closing branches. They are growing in business. Actually, they are growing in business, but their leadership believed in digital form. So they want to find a digital bank, they want to find digital branch, they want to find digital assistance. They are innovating and investing in very sophisticated kind of technologies because they adopt, but others are not. Others in the region, every single whatever paperwork or anything, you have to go by yourself, which is not convenient for businesses, for consumers anymore. And this is where, if the bankers actually is not taking that opportunity and that wave of digital transformation, somebody else will come. And this is what will start to happen. Now, UAE is very mature and actually very, very open when it comes to digitization. Even their banks actually are standard when it comes to the region on how digital you can be. You can be 100% digital. But even though we found such initiatives like Al-Abbar, he's a founder, he's ex-Emaar, and he's a founder currently of the first digital bank in the UAE. And this is a fact. So look about other areas whereby the bankers are much more backward than what the UAE levels are. Definitely,
Okay.
we will find new players. We will find new kind of investors, newcomers to the region. It could be global players, it could be regional, or it could be local. And you know, they find the space and they take that wave, and definitely they will grab the customers.
Okay. Thank you, Farouk. A reminder to our audience members, feel free to ask your questions. There's a Q&A button you'll see at the bottom of your screen. Simply click on it and fire away. I look forward to some more questions. Kathy, question for you. What do you think are the top compliance priorities in the post-pandemic age for any MSB?
So in the post-pandemic age, we have seen such an increase here in the US in the remote work area. So security is a big compliance priority for us. It's important because, you know, we've seen companies deploy their people to work from home, you know, securing the transactions, making sure that information is not compromised. So that's really a priority on that front as well. We've seen specific states here in the US, New York, for example, and also California, of course, is into that direction where they're requiring companies as part of their AML program to define what their security requirements are, right? What is your cybersecurity plan? How do you notify consumers in the event of data breaches? So that's really taken on a higher priority. As well, we've seen, you know, new phishing scams here, email fraud. So that whole concept is important. The other priority I see is, and I'll kind of key off some of your questions before about the technologies, are embracing these technologies and helping the regulators understand how they are used. This helps, this is important because, for example, if you're being examined and you're saying, this is how I flag my transactions, you know, the regulators need to understand, you know, is that technology something they can trust? So the parts of your system that are using that technology are important to have. It's a priority to help understand actually the technology, so then you can communicate that to the regulator who may be examining you, so that you can, you know, be successful in that front. Those would be two areas there.
Very interesting. Thank you, Kathy. Same question to you, Ibrahim. Your thoughts?
Yeah, I mean, if I look at the priorities, adding to what Kathy mentioned, post-pandemic, obviously it is also to keep in pace with all the disruption happening, because the pandemic has really given rise to something that we did not think of, I would say, pre-pandemic, right? I mean, we all know that, you know, how it has, you know, accelerated the digital. So this is where I think from compliance perspective, I would say, we need to keep in pace. We need to adapt to the latest technologies. We need to make sure that we cater to the needs of the people in this difficult era.
Yeah. Kathy, what can we expect to see in terms of RegTech solutions in the next 12 to 24 months, in your opinion?
So I guess tying into my comments about security, I think in terms of communication tools, the big ones that we've been using here are Zooms and Teams, you know, ways to communicate in this remote working environment under more secure transactions. I think we'll see. We're also going to see some things with consumer data privacy, you know, how to segment your databases and secure, you know, with some of the initiatives of the consumer owning its data, whether it's allowing you to share it under certain circumstances. Those are all going to require tools in order to help the company identify those people, track those people. And at the end of the day, the regulator is going to want to know if they're responding to complaints. How did you separate out that consumer? So those are the two, I think, trends being driven to a degree by the environment and regulation that we'll see have a greater emphasis.
So your second comment, Ibrahim, correct me if I'm wrong. I mean, it ties into what we call GDPR here, right?
Yes.
The General Data Protection Rules here in the UK.
Yes, that's
and
for the
Europe.
EU. And then we have the
Right.
Data Protection Act, the equivalent of GDPR in EU. That's correct.
So the next 1 to 2 years, we would have like we would witness US's own version of GDPR. That's what Kathy, you're saying, right? If I understand correctly.
Yes, right now we just have some definitions of that at the state level, like in California, which
Right.
of course, is one of the largest states, and many of the companies that do business operate their business to the highest standard, right? So
Mhm.
they would meet that obligation, but there really is no federal level umbrella policy at this point there, but I think we will see that. And again, that's driven by the big tech companies. And I would say our administration's concern over, how much information they own and what will, how it will affect the consumer.
Okay. Final question from me, and then we can wrap up. We have 8 minutes to go. And this question is for all, to all my esteemed panelists. Simple question, generic question. If you could summarize in a minute or two, it would be great. How do we build trust in the industry now, given where we are? Let's start with the East and work our way towards the West. Farouk?
Yeah, well, see, I mean, one of the things the ecosystem need to be ready to build consistent communication post the pandemic. We all realize now that the physical communication, which used to be built between the ecosystem and the technology from a technology perspective, and technology providers with the financial providers, actually currently is not there. We've been working, even though we are here in the UAE, for instance, we've been working with financial companies, which is, I believe, few blocks from here, but we cannot see them. So one of the things I believe the ecosystem should build a modern communication. That modern communication actually will help first to re-establish or regain that flow of data between the technology provider from one side and the receiver from the other side. This is one. Two, post-pandemic, you have to be also agile with whatever challenges the financial systems is facing, and how we gain their trust by sharing the vision. And I believe in today's panel, it's a very small example of where this sector is directing. So that communication need to be constant, because if the financial systems is not seeing that the digital transformation and technology are tools for growth and tools maybe for even for their existence, the reason for their existence in the future, definitely that need to be shared, and that need to be built on trust, and trust that should be also there is a technical part for the trust word, because it's not only financial. You have to be able to deliver with all the challenges that everybody is facing.
Okay, thank you. Ibrahim, from UK/Europe's perspective, how do we build trust in our industry?
Yeah, I mean, trust and innovation, they have to go hand in hand, I would put it this way. And here is where, of course, the importance of regulatory bodies comes into picture. They need to make sure they understand actually what innovation brings on the table and how they can ensure that this innovation does not cause any sort of issues with the consumers or with the other stakeholders in the space. So that's one thing very important. So it has to be a balanced approach, I would say, and they have to work in a very collaborative manner. Regulatory bodies need to be definitely very much aware of what's happening in the innovation space, and they should really understand the needs and then set up the regulations accordingly, hand in hand with the players in the ecosystem.
Right. I know I'm going to ask you another question, sorry, but it goes back to what Farouk said earlier. The market is driving innovation. The market is pushing regulators to respond in the Middle East, in specific countries that Farouk mentioned. Is it the same thing in the UK? Do you think the regulator is...
Yeah, so in the UK, it's more regulatory driven, I would say, rather than market driven.
Right.
So, yeah, so that's where we have seen, the emergence of open banking and all. Now,
Yeah.
obviously, things are changing now because of this open banking and PSD2. We see that the market is demanding much more services than probably the regulatory was initially, expecting.
Mhm.
But
Right.
yes, it is. I mean, going back, it is more of regulatory driven market, I would say, in this part
Right.
of the world. Yeah.
Okay. Great. Thank you, Ibrahim. Kathy, same question to you. How do we build trust in the industry? And if you could kindly also address the sub question that I posed to Ibrahim about market driven versus regulatory driven, that would be great.
Okay, so I think you build trust with, I'll go with Farouk's comment too about communication, and I would also add education. And that goes back to my earlier point where, the regulators have so much coming at them that they need someone to help facilitate that. I'm sure that in many parts of the world, just like we here in the United States, we represent the thoughts and the different services of 80 different companies, from companies that sell prepaid cards to small money transmitters that have agents, to digital products, to different corridors. And being able to present such a diverse group and information and needs to regulators, I think helps to accelerate that communication and education and helps to build trust. As far as our what's being driven here, I think it's would be more market driven, to be honest with you, as opposed to regulation driven. The market is driving and expanding for products and innovation, and the regulators are trying to catch up and control that to a degree. Many of these products, which we didn't even touch on today, in terms of the MTO space, are giving the financially underserved in our area tools and access to the financial markets that they didn't have before. So I think that's also a key component in the growth, and also an important aspect for the in building trust. That we are the industry that's helping to I don't want to use the word bank, but bring into the financial services sector those that are generally forgotten.
No, great. Thank you. Thank you very much, everybody. Thank you very much to everyone for attending this panel session. There's so much to discuss, but we only have limited amount of time here. I really wish we could carry on, but yeah, that will look forward to the next IPR event and the next MSBA event and IMTC events that I'm sure we'll get a chance to continue our discussions. But we hope you found the session useful. Thank you to my esteemed panelists. Thank you to the audience for attending. Our next panels will be starting today at 1:30 p.m. GMT +1, and it's titled "A Guide for Startups: Everything You Need to Know." And then there is also another session called "Stepping Up Mobile Payments and Reaching the Unbanked." So please make sure you don't miss it. If you want to review what has been discussed today, we'll be providing a written summary and video upload of all of today's sessions at www.remitone.com. Lastly, thanks again, everybody, and please get in touch if there's anything you'd like to discuss regarding the session or Remit One. Thank you very much, Kathy, Farouk, and Ibrahim. Thank you very much. See you again soon.
Thank you. It's been a pleasure.
Thank you. Thank you very much.
Thanks. Bye.